Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, May 5, 2015. Inside the numbers tonight, we're going to discuss the SPY and the E-mini futures contract, of course. I've got numbers and I've got a lot of data and stuff. We'll talk about crude oil and we'll talk about the perfect trade. Gold. Working the numbers, we'll discuss the target that was hit today and what to expect next. Interest rates in the bond market. Did we have a reversal today? We're going to dissect that a little bit. There's a case on both ends. And then we'll talk about the U.S. dollar. So let's get right into it. Here's the SPY chart. And I know this is a busy chart, but I'm going to explain everything. And there's a reason why all these lines are here. Okay, so I've added a couple since you saw it last. And let's start with where we went today. So I'm going to go over to the 60-minute chart, okay? And you can see this purple trend line here, which I put in at 208.97. Okay, we came in and we pierced that. We bounced through it, okay? On an hourly basis, that was a pretty good bounce, right? And then we came back down to it again, and we finished below that line. But you can see how that line was important. Okay, we touched that line. Over here, that line was important. You could see where we had a slingshot above it, came down, came back to this line above it, tested it, tested it, tested it, tested it, and we closed below it today, and we closed below it here too, but then we pop back up. So we'll see what happens tomorrow, but there's another line that's important, and you see this diagonally down-sloping trend line. Let me go back to the daily chart, and I'm going to explain that one. Here it is. Okay, now I use this. I've been using this for quite a while, but I haven't had it on here. I don't know that I have it on here at all. But here, the reason I put it back on tonight for you to look at is because of its importance. So this was a down-sloping trend line that once we broke above and we didn't close below, then it was a formidable trend line. And if you remember, I'm going to go refresh your memory to one that we looked at a long time ago. Remember this one? This is way steeper. But the point was, I said back here, as long as we get above this trend line, then the market will be in a bullish tone until we come back down below it. Okay, and we never did. So going back to the SPY, the reason I put this line in here tonight for you is because we closed below this line tonight, and that's of importance, okay? So that's part of the case for the downside. Obviously, we had a thrashing today in the market. The NASDAQ and the IWM, the Russell 2000, were really hit hard, and that tells you that money was flowing out of the market, out of risk assets. So the point is that, I said that we were going to have an imminent large move, and the odds would favor right now that the move is on the downside. It's not definitive yet because we really need to close below today's low tomorrow. Okay, today's low tomorrow. Today's low being 208.73. We've got to close below that tomorrow to really solidify the downward case for more downside pressure. And if we did get that, okay, then we would see, these other lines would come into play. You would find some some support at 207.50. You'd find some more support around 206, and you'd find a lot of support at 204. And if 204 didn't hold, then the 200 period moving average comes into play again. So we'll call that the 200 in between that and 204. And that would depend on the velocity in which the market would come down to that level. If it was a real hard sell on tremendous volume, then you might get to the 200 period moving average. But if it's not, if it's a less than, huge volume day, then you would probably stop and stall at the 204, and that would provide a good level of support right here at double bottom, okay? So on the upside, it's pretty simple. If we don't close below this line tomorrow, okay, if we do close below this line tomorrow, if we close above this downsloping trend line tomorrow, then the market goes back in a bullish tone. So that's pretty simple. So in the morning, okay, if you're below this line, it's most likely a bearish tone. If you're above this line, it's a bullish tone. Okay, that's pretty simple. And you can put that line, and we can really use the 209 area as that line in the sand. Your next level of support is really even above the 207.50. 208 is going to be pretty important, but 207.50 for the most part. If you start to come down, you'll know it when you see it. It's pretty obvious when it begins. But if we do pop up tomorrow and we don't close below this line, if we stay above this downsloping trend line, then the market remains in a bullish tone. So that's where we are. So we pretty much have one more day to find out, what the directional move is going to be. Now, what do you do after the fact? So is this the break that's going to take us down, 20% in the market? No, I don't believe so. And that's the interesting point. I know that's what you'll hear on TV. You'll hear the sell in May and go away, and all the pundits are getting bearish as heck. I know it. But at 204, I'm looking at it as another buying opportunity for another move higher, okay, because from this point forward until we get into the middle part of the summer, the market is still in a bullish seasonally period of time. And what that means is that dips are meant to be bought. We are the buy the dip crew for now, for the next couple of months, okay? Unless we break 204 considerably, then all bets are off. And if we come below these lows, then something else is going on. But for now, okay, that's the game plan for now, okay? All right, let's move on and let's talk about gold. So gold did its deed today. It went up and it hit the level, it hit the target at the first target from last night. Remember, I said it was going to be 1198, roughly, give or take, and we hit 1199.30, I think it was today, and that was pretty good. And then we backed off a little bit, and that's not that out of the ordinary. So let me just show you what that looks like on the hourly chart. Okay, what it looks like on the hourly chart is we hit the level, we backed off, and we came into the 200 period moving average, also converging with an upsloping 20 period moving average, obviously underneath an upsloping 50. So this is a bullish tone. As long as we stay above these moving averages, that's bullish. So I'm looking for higher prices yet coming. The next target we're going to be looking for is back to the 212 level, up at this level here, at this purple line here that we've visited once before. I think we're going to visit it again, okay? So that's where we are in gold. If not, if we do break down, let's go back to the daily chart. And if we do break down, really at this point, your line in the sand is going to be 1168.40. I know that's a little ways away from where we are, but any close below 1168.40, and you probably have to go down to double bottom. But you stair step it if you want to be more cautious and you're long gold on the futures. You stair step it and you say, well, my first line in the sand is a close below this day here, which is 1184.90, so 1185. And then the next one down here is 1176.60. So that's the way the market works. It kind of goes in stair steps. So right now we have to achieve this red bar high here. We have to close above this high in order to get back to the 212, which isn't far away from there anyway. So that's most likely going to happen in one day. So anyway, that's where we are in gold, and nothing's changed. I'm still looking for higher prices. Okay, GDX, I'll cover that real quick. Nothing going on. GDX didn't go up with gold today. It really got taken down with the stock market, but only 13 cents. It was really flat for the most part. It was down 0.5% or more, but 13 cents. It was really actually due to the stock market, not necessarily gold. But this is also in an uptrend, and what you can do here, if you want to be long GDX, you can use your trusty trend lines, and this is where they come in handy. I mean, this is an obvious trend line. Now, I'm not drawing it in. The market's drawing in the trend line, right? It's drawing it in by virtue of bouncing off this area each and every time it comes into it. So if you want to be long GDX, I would say draw a trend line on your chart, and as long as you stay above this level here, then the market's in a bullish tone. If you break below this trend line, then you start coming down to your pivot points. So then what you do is you draw a line across here, okay, and this is going to be your first level of support if you broke the trend line, okay? And then you draw another line, okay? And then you have another pivot low, and that becomes another level of support. And you just go on down from there. And that's the way the market works. It's always going to come back and test former pivots are going to be support. Former pivots on the upside are going to be resistance. That's just the way it works. Okay, let's go over to oil. This was a good one. Now, we're doing well here with oil, okay? We had a target back down here when oil was right at $58. I said as long as we close above $58, we're going to go to 60.5, and that's a pretty good move. $2.50 is a pretty good move in crude futures, right? That's several $1,000s on just one contract, okay? So it's $2,500 on one contract. All right, you have 3 or 4 contracts, and that's a nice little payday in a couple of days in the price of crude oil. Now, where do we go from here? Well, it's pretty simple. As long as we stay above and stay in a bullish tone, okay, above 60.50 is going to be support, okay, then the market's going to want to head towards that 64 second target. Now, we may or may not get there, but as we get closer to second target, if we do get up to 64, you're going to hear all the real bulls come out. They're already starting to talk about long-term bottom in oil, and they're starting to talk about $70, $75. That's what happens on the way up, folks. On the way up, price targets get raised. On the way down, price targets get lowered. And it's really the opposite happens, right? As we get closer to 64, we're going to be looking for one hell of a short opportunity, and everybody else is going to be getting bullish, okay? So, you know, that's just the way it just goes over and over and over again, right? I mean, I took you on a ride on this trade, and hopefully a lot of you caught it. I know a lot of you did because you emailed me, so I'm happy that you caught this trade. And, you know, some of you have done the right thing. Some of you have taken half off and you have a stop in the money with a trailer on it, meaning as the price moves up, your stop moves up, and you just guarantee yourself a winning trade. So this is the perfect trade. This was a great trade in the price of crude. We started talking about it down here, that this was a bullish pattern developing, and I started talking about 60.5, and that's why I kind of made this chart look pretty, and we kept adding to it, and I kept adding components to this chart because it looked so good. We just wanted to stay on top of it, make sure everybody knew exactly where we were. So hopefully those of you that took the trade, I know you made some nice dough on it, and good for you. Okay, so let's go over to the bond market. This is an interesting one. Now, did we get a reversal today in TLT? Okay. Now, it looks like we did. Okay, we had relatively decent volume, but not enough to call a low. Okay. We had a low in here, and the volume here was right about almost 20 million shares, 19.5 million shares. And here today, we're right about 13.5 million shares. Not bad, but the volume didn't have me sold. Here's the other thing. Remember yesterday, you'll remember I said that if we close below yesterday's low, meaning this low here, it was yesterday, it was today, right? But now it's Monday's low. If we closed below Monday's low, I was going to be out of the trade, right? And even though this level held for a day and a half, and that was okay, this level looked like it was going to hold, and it looked like it wanted to make a bottoming tail today, and it closed below this level, and that's the problem. Here's the low, 122.83, and today's close, okay, was 122.66, okay? So, this is the deal. Systematic approach to investing, okay? It's paint by numbers. I'm out, all right? It didn't do what it was supposed to do. Tomorrow, could it move up and could I be wrong? Absolutely, okay? But I paint by numbers, and if it doesn't do what it's supposed to do, I move out, okay? And that's the end of it. And if it recaptures this line and it begins to move higher and it looks like we did put in a low, I'll reassess at the time. But you got to understand that I was serious when I say the market didn't close above this low. Now what happened was, if you look at the last part of the day, look what happened. They made a run for it. Okay, they made an attempt to get that number, and they hit a high of 122.75, so they achieved it, and then it got knocked back down. To me, that's a bearish tone, okay? This level here, 122.60. Where did we finish? 122.68. All right, so at least we finished above this red bar high, but I don't like it. And therefore, I just paint by numbers, I follow my rules, and I move on, and I'll reassess later. And that's the way I do it. Remember, my capital is my inventory. Without my inventory, I'm out of business, okay? I take no chances when I have like a 75+% probability that the trade is in my favor. I take it. When those probabilities get reduced and the reasons I'm in the trade left the building, okay, then I leave the trade and I leave it to other people and I just go into something else that gives me higher probabilities. I don't care whether it's TLT, whether it's a stock, whether it's ExxonMobil, whether it's Apple, whether it's anything under the sun. I don't care what it is. It's something that's going to give me the best probabilities. I don't have to win every trade. What I have to do is know where I'm wrong, and today I felt I was wrong in TLT, therefore I moved out. And that's the end of it. Let's go over to the dollar. Okay. The dollar, again, you know, it looks like it wants to make a low here, although I would have expected a better rally today. We didn't see it, okay? I was expecting a third up day off of this, and we saw it early on. We tried to make a run for this top end of the trend line, this top end of the channel, but the market got repelled. And I'm not saying that's a problem. I'm just saying, based on expectations, I expected an up day today. So we'll have to play it one day at a time. But here's the good news. Where are we wrong? For now, we're wrong below 94.71. We're wrong below the low over here on a closing basis, okay? Even if we stay above this channel line, I'm going to want to see the market prove to me that it's ready to move higher and it's not ready to make another low, because there's other levels here that could provide support on the downside, and there's nothing to say that we can't reach some of those levels. Okay, there's one. It's a little lower than that. I put the line in a little bit higher than I meant to. And here's another one, and I don't expect this one to get reached. But these are levels that do come into play if this market makes a bearish pattern. So if we go sideways for, let's say, a couple of weeks above the bottom end of this channel, I would expect the market to break lower. So that's why I say any close below this low, and I'm going to reassess the trade. Okay, again, put the probabilities in your favor. For now, I'm bullish on the dollar. I'm still bullish on the dollar long term. I just may not want to be long if it's going to come back down into this area somewhere. I may just want to pick it up lower later, right? But I still believe 105 to 110 is in the cards in the dollar. There's really no doubt in my mind on that. Okay, so let's give it a wrap. Hopefully this has been helpful. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.